The conflict in the Middle East is a humanitarian tragedy with far-reaching consequences. Beyond the human cost, the conflict casts a long shadow over the global economy. Already grappling with the pandemic's aftermath, the world faces another shock. Uncertainty reigns as investors and businesses assess the situation. The conflict's impact is felt acutely in energy markets with ripple effects beyond. Investor confidence, a key driver of economic growth, is shaken. The conflict injects significant volatility into the global economy. Oil, the lifeblood of the global economy, is at the holds vast oil reserves, and any disruption has global repercussions. The conflict has sent shockwaves through energy markets, pushing oil prices higher. This surge is driven by fear of supply disruptions and escalation. Traders are pricing in a risk premium due to heightened uncertainty. For consumers, this means higher prices at the pump. The longer the conflict, the greater the potential for lasting disruptions. Central banks, the guardians of economic stability, are closely monitoring the unfolding situation. Their mandate is to control inflation and maintain financial stability. The conflict in the Middle East presents them with a complex challenge, adding another layer of uncertainty to an already delicate economic balancing act. On the one hand, central banks are wary of acting prematurely. They want to avoid exacerbating market volatility or stifling economic growth. They are also mindful that the current surge in oil prices is driven by geopolitical factors, not necessarily underlying economic fundamentals. On the other hand, central banks cannot afford to be complacent. If the conflict escalates or if oil prices remain elevated for a prolonged period, it could have a significant impact on inflation expectations. Central banks may be forced to raise interest rates more aggressively to combat inflation, potentially slowing economic growth. Section 4. Wider war, deeper scars. A global recession? The most alarming scenario is a widening of the conflict. A full-blown regional war, particularly one that disrupts major oil production facilities or critical shipping lanes, would have devastating global economic consequences. The world economy, still recovering from the pandemic, is ill-prepared for such a shock. The immediate impact would be a sharp spike in oil prices, potentially exceeding levels seen during previous energy crises. This would trigger a chain reaction, fueling inflation, disrupting supply chains, and eroding consumer confidence. Businesses would face higher costs, reduced demand, and increased uncertainty, leading to job losses and reduced investment. The interconnected nature of the global economy means that no country would be immune to the fallout. Even those geographically distant from the conflict would feel the effects through higher energy prices, reduced trade, and financial market volatility. A global recession, while not a certainty, would be a very real possibility. Section 5. Beyond oil, trade routes and supply chains at risk. While the focus has been on oil, the conflict's potential to disrupt global trade is another major concern. The Middle East is a critical transit route for goods and energy, and any disruption to shipping lanes in the region would have far-reaching consequences. The Suez Canal, a vital artery of global trade, is particularly vulnerable. Even a temporary closure of the Suez Canal would cause significant disruptions to global supply chains, delaying shipments and increasing costs. Manufacturers reliant on just-in-time inventory systems would be particularly hard hit. Consumers would face shortages of goods and higher prices, further fueling inflation. Section 6. A world intertwined navigating uncertainty. The conflict in the Middle East is a stark reminder of the interconnectedness of the global economy. Events in one part of the world can have ripple effects that are felt far and wide. The conflict has injected a significant degree of uncertainty into the global economic outlook, and the consequences are likely to be felt for months, if not years, to come. Governments, businesses, and individuals must all prepare for a period of heightened volatility and uncertainty. This means being prepared for a wide range of potential outcomes, from a relatively quick resolution to a prolonged and escalating conflict. The situation is evolving rapidly, and it is impossible to predict the ultimate outcome with certainty. However, by understanding the potential economic risks and preparing for different scenarios, we can mitigate the negative consequences and navigate this challenging period.